What's up, everyone? Last weekly roundup of the year. We're doing something special here. First things first, though. Santi, how you doing, my friend?
GM, my friend. Good. It's good to be here.
Nice. What's the story of the thing in the background?
Well, last time I shared the podcast with one of my good friends and said I had the door closed and there was all this clothes hanging. They're like, you got to level up your game here. Like, what's going on? And naturally, I just had to open the door because I had this custom made because it so speaks to me. As we say in crypto, we like to ape into things, and there's ape culture. So, obviously, that's my little ape right there that reminds me of who I am every time I come in and out, my office.
So you had a custom-made ape, and what is the ape holding? I can't fully see it.
It is holding a barrel, and I love Donkey Kong, so this is why I like when I saw these. It was like I discovered who the artist was, and I said, "Well, you got to make a custom, one for me." So obviously, Ethereum gas. That sort of meme. And then also it has the Ethereum logo on it. I actually had a custom Bitcoin one too, different color. And it broke. And
you sold your Bitcoin?
No. It actually broke on the way here. And someone said, well, that's just very symbolic. And, it's no longer here. So that's the only ape in my house.
Quotes, it broke. He sells your Bitcoin, smashes the thing on the ground. We're moving past Bitcoin, baby.
Hey man, I'm pretty superstitious, so I believe in magic, as you know, and so this is the only ape here.
Love it. All right, guys, here's what we're doing today. First, we're gonna start with 5-10 minutes of just thoughts on the year, quick recap of 2021. Primarily, Santi's gonna lead that, just thinking about he made some interesting predictions at the beginning of the year, and just how'd we do on those? How'd he do on those? But the real goal of this episode is to make some predictions for next year. Santiago's laid out 6 or 7 predictions. I've got 7 predictions. I think I was supposed to do 7. I did 8. Basically, the structure of this is going to be, I'm going to ask Santiago or share Santiago's prediction. I'm going to share my thoughts around his prediction. I also made my predictions separate from Santiago. We did not talk about these beforehand. So, for example, the first one relates to L1s. I'm going to share his prediction about L1s. I'll share my prediction about L1s. We'll talk about L1s in 2022, and we'll move past it. Sometimes we agree. Sometimes we don't agree. Sometimes we have similar theses around things like gaming and L1s we both talked about. Sometimes Santiago talks about things like the Ethereum merge. I didn't talk about that, so Santi will lead that section. So anyways, Santiago, are you ready to jump in, my friend?
Yeah, let's do it.
Cool. Lead this section. Take us home here. I mean, you made these great predictions at the beginning of 2021, and you do a lot of thinking about the space. And so what's kind of your, how are you thinking about closing out this year as we have a couple days left here? And what did you find interesting? What did you get right? What did you get wrong?
Mm-hmm. No, it's really important. I think when you think about the future, I think you invariably need to think about, okay, what was I thinking a year from now, a year ago from, and I think that's sort of in my process of coming up with these predictions for 2022. I thought it was important to just recap some of the things that, trends that I was seeing early in 2021, things that I totally missed. And so I'll just walk through pretty quickly and we can dive into them. The first one, obviously NFTs. I mean, the explosive rise of NFTs really surprised me. I mean, obviously you started to see it early in 2021, but the extent by which you saw that hockey curve of OpenSea volume particularly has been very, very explosive. And I think it really started middle of this year. Bored Apes and all these different projects just dropping. And, obviously I think we're going to round out the year with 15 billion of volume. And so I was thinking about how big can this get? And I'll touch on this in my prediction for 2022. But I think the first one, unequivocally, NFTs. Huge rise there. The second one was the rise of EVM compatible L1s. I was thinking, I was very excited about L2s in particular. But I think we definitely saw Solana, Luna, Avalanche, Cosmos really, maybe to some extent Polkadot, really come front and center. And a lot of investors, we had the Solana conference earlier this year. I think a lot of people were really surprised about that. And, I think that trend, as I'll talk about later on in the episode, will continue into the next year. Another big trend of 2021, EVM L1s got more attention than, L2s, like Arbitrum Optimism. I think Optimism was delayed. Arbitrum's obviously, probably leading the charge. Matic, Polygon is very strong, but I think the EVM L1s, probably captured much more attention. So I would have thought that L2s would have gotten more traction, and I think it was EVM L1s that got more. And so the other one, which is probably one of the more important ones, is gaming. You know how I'm so excited about gaming. This time last year, I was invested in Luvium, and on the basis of seeing all the traction that Axie was starting to get. But I think let's just put some facts here. Axie, I think, is going to round out the year with 1.5 billion in revenue. To put that in perspective, that puts them in the top 10 or 12 gaming studios in the world. Like, not crypto, just full stop. Like Sky Mavis, which is the company developing Axie, just one game, 20 employees. I think it has like less than 50 employees, the latest I checked. But it's just shocking to me, the extent by which Axie, YGG has really proven out this category, and how big GameFi, let's call that, can be. And we'll touch on that in 2022. The other one has been, one of the things that I was like probably like more excited about that didn't get much traction was this cross-chain deployment. You saw protocols like Sushi and Aave, primarily in DeFi land, start deploying in some of these other chains, from Binance Smart Chain to like Phantom to Avalanche and others. And I think like the traction there was just kind of like lukewarm. I think like a lot of these deployments were just marketing, and kind of didn't really get much traction. On the other hand, projects that are just forking stuff probably got more attention, like PancakeSwap, right? And so that was interesting. And obviously, something to just kind of zoom out right a little bit is, I think it's been pretty impressive that the awareness that you're starting to see in crypto, just mainstream. Obviously, NFTs contribute to that, but like, Coinbase IPO'd, FTX, Crypto.com, each respectively had massive partnerships with sports arenas. So obviously touching on that, and that's going to continue into next year into the level of awareness in crypto. We've talked about fundraising a lot in this episode, in this series of episodes. I think that obviously, from both retail and institutional side of things, just level of awareness continued to rise pretty substantially. And then just really quickly, certain things that I was very excited about that didn't really come to fruition as much, or was just sort of my expectation was that it was going to probably continue into this year, and kind of didn't really, was DeFi. Probably most important. I think there was a hangover from summer highs, and a lot of DeFi assets. The progress is there. It just people just moved on to other narratives and trends. Included in that is Sushi. I was pretty excited about the roadmap of Sushi. Maki, but Maki left. A lot of the core team sort of disbanded. There's an interesting proposal to restructure. I don't think it's dead, but I think like they've been sort of slow into the deployment of Evento Box and Shoyu and all this stuff. So I think Sushi is something that we talk about here a lot. And of course, like I think one of the other things is this sort of regulatory wall of worry that always exists in crypto. I don't think it was as bad as we would have thought. Like, we ended last year with departing, was the Secretary of the Treasury, Mnuchin, leaving and trying to like do this midnight ruling, which really scared the shit out of me. But it obviously it didn't go anywhere. And the infrastructure bill was also, pretty daunting, I'd say, the initial version. And I think a lot of what this has caused is, one, it wasn't as aggressive as we would have thought, but it more importantly rallied a lot of people in the industry and even outside and I think politicians realized, wow, like there's a lot of people that care about crypto, which is not just this minority. I think the infrastructure bill created a lot of bipartisan support and discussion. And so I think the dialogue continues to improve, and I've been pretty excited about that, which is, I think we talk about regulation. It's a boring topic, but I think it's something that is important. And I think regulators have come to understand that this is too big and we need to be really thoughtful to in how we regulate it. So I'll pause there. That was sort of my quick, dirty recap.
I also have thoughts on some of these things. I think one of the biggest things that I was just surprised by is there's all these market narratives, like market cycles and price predictions and things like that. So a couple of them, right, were like blow off top. A lot of people thought we might have a blow off top at the end of this year, carrying into early next year. Those people who thought that probably were around in like 2017, blow off top to end the year, starts going down in the beginning of the year. There were a bunch of other market cycle theses. Not a single one of them came true. I think that just the market has surprised people. Like, we've been floating sideways for quite a while right now. And that's really been surprising. And then the other thing I'm just is a little surprising, but also just happy about, and like I guess I should have expected it, is the sectorization of the space. And DeFi goes down, DeFi hangover, gaming goes up, while NFTs kind of chill, gaming goes flat, NFTs start booming. And I think it's really exciting to see, and I think it's really good for the space. So that's one of the most important things that started to happen in 2021, in my opinion.
Yeah, absolutely. That's such a good one. Probably the most important one, to be honest. This idea that crypto is so many things for and big markets, each respectively: NFTs, gaming, DeFi, Bitcoin. So absolutely.
Yeah. I also thought Coinbase was going to be worth more than, or was going to buy a major bank by the end of 2021, which did not come true, which I really wish it came true. I'm talking like, not like a Wyoming license with a little bit of Bitcoin on the balance sheet. I'm talking like a globally significant financial institution.
Like buy Deutsche Bank, right?
10 to $50 billion market cap, UBS, Barclays, Deutsche Bank, Credit Suisse, M&T, Ally Bank. I thought they were going to buy one of those folks. That did not come true. I will say I kind of got one prediction, which is I thought, this is when it seemed crazy that companies would raise this much money when the rounds were more like 50 million. I thought that more than one crypto company would raise $1 billion round this year. Came close to that. We had only one. I said more than one. NYDIG just raised $1 billion round. FTX almost squeaked in with a $900 million round earlier this year. So,
well, to be fair, just to put that in perspective, I thought interesting stat here. Coinbase, which has been pretty depressed in my opinion, it's trading at like a 26 time forward P ratio. It's got a market about 55 billion. Deutsche Bank 25 billion. So they could definitely do that, and the year's not over. So
we're gonna get downvoted to hell like that Ubisoft NFT release if we keep doing 2021 reflection. So let's get into give the people what they want. Let's talk about 2022. First big thing here, Santi. Here's what you wrote. Continued rise of L1s. You mentioned things like Near and Phantom. I had something similar, actually. My very first one, I said L1 stay hot. And I can talk about kind of sub predictions within that. But tell us what you're thinking about these L1s.
Yeah, I think in particular I'll talk about Near, which is, for a long time I felt like it's sort of like an R&D shop of Ethereum. It has a really competent technical team. Ilya, who one of the co-founders, they come from Google. They're really sharp guys. I've always felt that it was really solid tech, but they sort of weak on the business development side of things. Recently I think I've noticed an uptick in number of projects that are looking to deploy in an EVM compatible chain like Aurora, which is sort of like a moonbeam for Polkadot. Similar as Aurora allows you to like really deploy EVM compatible apps there, and so. I think they're done. I've always felt that it sort of is a few steps ahead in Ethereum's scalability roadmap. Because they move faster, they're more nimble, and so it's pretty interesting to see that and seeing a lot of projects and interest deploying there. So I think Near. I tweeted about this a while back, but I think Near is probably going to be one of the next L1s to really come front and center. And the other one is Phantom. I think there's been a lot of activity recently. I mean, obviously Andre's always been a strong supporter. You have Danny as well. There's a plan to restructure Sushi from these two folks. And so I think there's a lot of, when I think of like, obviously like you probably touched on this, like the L1s, the usual suspects in this category are probably Avalanche and, Solana and Terra, potentially Cosmos. I haven't heard as much about Polkadot, even though some interesting things are happening there. But these are the two that just come top of mind for me, in particular Near.
Near has run up this year from basically $1, I think it was to start the year, to like $16. It's at like $14 today. Phantom at, what is that, 2 cents? 1.7 cents. All the way up to $2.20. Interesting. So they've already run up a ton this year. I mean, you think these things kind of have like Solana, Avalanche type years next year?
I don't like to think about like, obviously you look at the relative market cap, and yeah, I mean, when you think about the upside, I mean, yes, I mean, you have Solana is trading at what, like Terra, for instance, is trading at like 100 billion fully diluted. Solana is at what? I forget now these days. The market's taking a beating as of late, but Solana, you have obviously you could think about fully diluted or current circulating supply as an important distinction. I always like to look at both, but Solana. When you look at like, when I came at this, it was more like the level of developer interest in these two projects I think is interesting, and when you compare probably like the relative valuation, obviously a lot of these things are. I like to invest in super early stage stuff, and so. But the question is, you always kind of, in crypto, sort of valuation frameworks are less established, right? And so I think a lot of this L1 trade is enticing because obviously when I was investing in DeFi, it's a lot like fundamentals, right? You can run discounted cash flows on a AMM or DEX like Uniswap or Sushi or Aave. And there's these protocols are cranking out cash flow, and so it's easier to value. But I think the L1s are a bit more difficult, and so relative valuation serves as a good proxy. And so obviously there's the relative if you can get similar activity. The framework is if you can get similar activity of what Terra is seeing, then if Near can accomplish that, then it's interesting if you believe that, and if you believe that the valuation of Terra is fair,
right,
or Solana or Ethereum or Bitcoin. It's hard, right? This is why I don't necessarily like to do these L1 trades, but nonetheless, I mean, I think there's a great report we should probably link to, which is the Electric Capital developer report, and they look at all GitHub repos. Not perfect science, but I think if you look at over time the number of developer and commits, and you sort of look at a lot of the different metrics, then I think developer activity is the thing that I latch onto to understand where are people going to. And I think there's relatively decent interest in these two L1s, and they haven't been front and center. You know what I mean? Like it's not like you don't see it in crypto Twitter as prevalent, if you will.
Yeah. So it's funny you start talking about things like Near and Phantom. I don't know as much about these about both of these as you do, but I did write new L1s that are not AVAX, Solana, and Luna will start showing up in the mainstream. It's obviously really, really hard to get over the network effects and compete with the network effects of other L1s that already have users and already have projects. But if this year showed us anything, it's that with a lot of brute force and also a lot of capital, you can actually you can get over that network effect hump. And the other thing I wrote is just I think the total market cap of ETH competition will end up matching or exceeding ETH at some point in 2022. So ETH right now is worth is market cap of 450 billion at the time of recording this. Solana 55 billion, Terra 30 billion, AVAX 25 billion, Near about 10 billion, Cosmos and FTM about 5 billion each. All
this
of
is
that
circulating
combined,
supply, right?
Yeah. All of that combined is about 130 billion. So ETH 450 billion, all of that combined 130. Quick mental math, we're looking at like roughly 25%, more like 28, 29%. I think ETH will have a really good year in 2022 with the merge, but I think the L1s will collectively go up more than 4x more than ETH, so that the combined market cap of ETH competition will match or exceed that of ETH. That's my
That's really interesting. We should probably plot this out, like the composite, L1s versus ETH, and if you could do a trade on that, then you're saying just go long that.
Yeah, exactly.
Yeah.
So, cool. Next prediction, Santi. You said gaming continues to dominate. I actually had something similar as like my sixth prediction. I said GameFi gets big. Again, I'm not as deep into gaming as you are. I know you've been pretty deep into things like Illuvium for a while. I'm just biased. This is my prediction where I get to be biased because I've been playing DeFi Kingdoms every day and just love the game. And I've been tweeting about it and hyping it up because I really like it. I haven't gamed in a while, but I used to play a lot. I think like a lot of crypto people as a kid, and like DeFi Kingdoms for me is the first game where I've most importantly enjoyed playing it, but B, the integration of DeFi and NFTs into a game is mind blowing for me. Like you can read all these articles on Medium, you can read all these Twitter threads. I am like, if you go to the farm in the game and you give your like jewel seeds, you basically give your seeds to this farmer, and what you're doing is you're creating a liquidity pool, or you're becoming a liquidity provider on various liquidity pools. And like there's really, really, really nice integration of DeFi and NFTs into the game. Like I bought a hero, that's an NFT, and it's got characteristics and things like that are rare. So that's my like just biased prediction just from playing one game. I'm like, if I like this, and I'm not a huge gamer, I can only imagine what it's going to do for everyone else. But I mean, you mentioned things like Illuvium, Ember Sword, DeFi Land, Guild of Guardians. Can you just give us high level, like what's going on with this prediction? Gaming continues to dominate. Yeah,
look, absolutely. I mean, I think like I'll tell you why I think gaming is still relatively nascent. I've said it before, but Axie as a game is good, but it doesn't probably compete against a Web 2 game. Call of Duty or World of Warcraft. These other games, I think, are going to be more immersive because they were built at a different time. And so you have a possibility of building really immersive game experiences that at least that I sort of ascribe to. Like obviously a battler is interesting, but like Illuvium, the team, if you haven't seen it, just go check out their Discord, follow Kieran. The graphics of it are just so immersive, and maybe this is what you felt with DeFi Kingdoms as well. And so I'm really excited because a lot of the criticism in crypto has always been, look, you're making these trade-offs. It's either not as good of a game, not as good of an experience, but the ability to have ownership and agency over these things makes up for that. But or you like the user experience of some of these wallets or applications. I just think that more and more these applications, these games are rivaling and are pound for pound from a UX UI perspective, graphics perspective, game lore are just like Web2 games, and the quality of that is going to show up. And so I think that is what makes me most bullish about this category. We talk a lot about play to earn, which I don't think is a sustainable and probably not the best nomenclature here, which is I'm excited about play and earn. We obviously, as these more immersive games come out, you will attract spenders, which are a big component of these games. And that's something we haven't seen. I think we're going to see it next year with these very immersive games. Obviously, when you look at the roadmap, Illuvium's probably going to go first in Q1. We're going to have Kieran early on next year. Ember Sword, probably in Q2. DeFi Land, Guild of Guardians, just a bunch of others, right? That are gonna roll out. And so, just anecdotally, Slush is a great conference in Finland. Finland's in Scandinavia in general. Like Finland as a country has produced one of the best games out there, like from Angry Birds. I think it was Candy Crush and a bunch of others. And I wasn't there. I was supposed to go, but I've been tapping into that. Like, for instance, one of the founders of Counter-Strike is now advising a Web3 project, a gaming Web3 project, and they're going to try to build a better version of Counter-Strike with all the elements of Web3. So imagine that, and that's going to happen next year. And so I think from a talent perspective, a lot of these developers, similar to artists that are now moving to NFT land pretty aggressively, I think a lot of these game developers are realizing that there's something really cool in Web3. I mean, let's not forget Vitalik. The reason why we started Ethereum is because he had a bad experience in World of Warcraft. So, I think there's a lot of community out there that is waiting to play these games. And again, I think it continues to be the Trojan horse that onboards, millions of users into the space. So again, continue to be really bullish on that.
Cool. I have a couple other thoughts on gaming. One prediction is that play to earn. People realize that's a bit of a misnomer. I don't think these games should be branding themselves as play to earn. If you look at actually the user base of a lot of these games, let's take Axie, for example, players are not doing two things. They're not playing and earning. There are players who treat it like a job and they earn, and they are grinding. They are hustling and they are trying to make a living playing Axie. And then there are players, the majority of the players, that are just playing it because they like it and because their friends play it. And the same reason that you play Call of Duty and Halo and these kind of things, because you enjoy it, right? And it's social status and things like that. So I think a lot of the branding and crypto Twitter talk makes it seem like everyone who plays these games is playing to earn. That's actually a small subset of these games. These games won't get big until the majority of players spend more than they make in these games because they just love the game, right? And so or even take out spending just because they love the game. So that's one thought there. The next thought is metaverse land. People realize that scarce land is not the perfect system for this. I actually did some research over the weekend, and there are a lot of stories of pre-crypto days, people buying the ability in-game to buy land just with dollars or whatever, and a lot of stories of it ruining games, which I need to dig into more, and I'll start sharing findings. But I think there's a really interesting argument that land scarcity, as we talked about last time, is the wrong model here. And then I think the final thing is just one takeaway from playing DeFi Kingdoms. Every single transaction you need to sign with your wallet, right? So DeFi Kingdoms is on Harmony. Every single time I go do a quest, every time I do anything, you have to sign. And so for something like a RuneScape type of game, or these kind of role play games, I could see how it would work like that. But something like a Halo or a Call of Duty, I don't understand yet how those can be crypto games because there's just so many actions being taken. Right. And how do you make it so you don't have to sign each how do you make it so each action isn't a transaction?
Yeah.
So that's just something I'm thinking about.
That's a good point.
Yeah.
Something to keep in mind when we talk to Gabby, Kieran, and we should bring on as
We
many.
have a lot of gaming shows lined up for Q1.
Yeah,
so.
yeah. Definitely.
Awesome. Let's get into the third thing. Ethereum's the merge, happened sometime in Q2. I actually didn't talk about this, which I think was maybe a botch on. I didn't have this as one of my predictions, but tell us why this is so important.
Look, it's not so much of the prediction is, for me, and we talked about it last time, I think people are underestimating or not fully appreciating how explosive this is going to be. There's been discussions around the merge happening sometime next year, whether it's Q2, Q3. I'm not trying to make an exact estimation when that's going to happen, but I'll tell you why it's important. So for context, the merge is the upgrade that we've been finally waiting for in Ethereum that really just swaps out proof of work with proof of stake. Obviously, there's been the beacon chain that is sort of like a transition into the ultimate goal, which is the merge, and which means the proof of work as a consensus engine will be deprecated, and all blocks in Ethereum going forward, will be produced via proof of stake. Why is that important? A couple things. One, the current emission of ETH under proof of work equates to like 13,500 ETH per day. When you annualize that, the inflation is like roughly 4.3%. Let's call it that. Once the merge happens, the ETH inflation curve is sort of like dynamic and is based on the proof of stake, however much ETH is staked as a percentage of the total kind of supply. And so the issuance model changes a bit. And what does that mean? Well, that means that sort of the estimated, and there's a couple of projections here, and we can link to them in the pod notes, but the inflation kind of all of a sudden drops to like practically zero, 0.3, 0.4%, if you will, like some estimates, which is kind of crucially below Bitcoin's inflation, which is 1.7, right? And there's all of these being criticisms of Ethereum total supply as being uncapped and all this stuff. And so I think like this I think is important for a number of reasons. Now you factor on top of that sort of the EIP 1559, which has been live for a while. Net inflation is actually going to be negative. So this will be a deflationary network. And so there's a couple of really important things. One, obviously, there's been a lot of criticisms in this L1 discussion, competing L1s, that Ethereum is just moving too slow, that it's abandoned its users, that it doesn't, that the roadmap's been delayed. Like, these are hard problems to solve, right? And so I think the merge will really lend more credibility, and I think will be a refresh, in bringing more attention into Ethereum, which, candidly, a lot of people just kind of left it for dead in many ways.
Yeah.
And so obviously from an energy efficiency standpoint, proof of work is much more efficient than proof of stake is much more efficient than proof of work. And so just kind of, I think it may attract a different set of institutional market participants that haven't invested in the asset class because they're concerned about, ESG stuff. And so, and the last thing they'll point out is, let's just not forget. So the merge does not solve the high gas fees that you're seeing in Ethereum. I think that will actually continue to persist. I make a prediction here, but I think gas fees are going to continue to where they are now, or just continue to rise. Or there's more demand for block space in the L1, which is important to make that distinction, because the merge, all it does is just you transition to proof of stake, and that's explosive, but it doesn't solve high gas fees. High gas fees can be solved if you go to an L2. That's really it.
Yeah. So just to recap that, like when you think about what this solves and what this doesn't solve in layman's terms, it does not solve high gas. It does solve, like this. It moves from proof of work to proof of stake. So like a lot of the kind of maybe institutional funds who are worried about ESG investing and things like that, it kind of enables them to buy ETH. Like, is there anything outside of that you think is really important? Does it increase staking, like the staking industry? Like, what are kind of the second order implications of this?
I've always felt the proof of stake is just sort of like a more, this is an entire discussion altogether, but like when you think about proof of work, there's a lot of miners that are expending this CapEx, which is ASIC chips. I think there was an investment for Millennium that bought like 900 million of Bitcoin miners from Bitmain. The problem with that is that miners there's always constantly this selling pressure from miners that are constantly selling to recoup their CapEx. And a lot of these ASIC chips depreciate pretty quickly. And so it's tricky. In proof of work, I think there's always this tension between a miner and a long-term holder of something like Bitcoin in a proof of work network. In proof of stake, you sort of, I've always felt to be more sustainable in the sense of like so if you hold the token, you stake it, to be able to validate blocks, and in exchange you get a reward. And I felt that that's just a more organic way to do consensus. And so there's, you probably remember this, Jason, but like in 3 years ago, there was a lot of criticism around proof of stake actually being a viable consensus mechanism. Obviously it's not as battle tested as proof of work and all this stuff. And there's concerns about proof of stake being rewarding the rich, which is i.e. existing token holders and all this stuff. But I get excited about proof of stake because I think it's just a more sustainable long-term way of reaching consensus. There's not a lot of chat about what happens to Bitcoin once the emission schedule dries up. Whereas proof of stake, I think, is a much more, I think, probably sustainable way of reaching consensus. So there's obviously other proof of stake networks out there out in the wild. But Ethereum being what it is, I think will send a huge message.
Yeah. I tend to agree. Number 4, big one. This is a big one. Resurgence of DeFi. I think this is a big section here. One of my predictions was DeFi makes a comeback. Here's what I said. I said DeFi 1.0 gets institutionalized with permission to DeFi. DeFi 2.0 10x's at least. And DeFi 1.0 continues partnerships with fintechs. Fintech and crypto continue kind of merging as an industry almost, like, and actually really crypto just continues eating fintech. A lot of these fintechs and banks will really, really, really want the yield that DeFi can produce. They'll partner with folks like Uniswap and Compound and Aave and all that kind of good stuff. So that's what I'm looking at. But you kind of bucketed this into stable coins and TVL. So tell us what you're thinking with the resurgence of DeFi.
Yeah, look, I think the first one is stablecoins have always felt they're the onboarding mechanisms here. We had Jeremy Allaire in the episode earlier. I continue to think this is the Trojan horse in a crypto. Why? Because the ability to have a high yield savings account, which increasingly will be a trend next year, maybe through permission DeFi, maybe through just normal DeFi with insurance or both. I think insurance is a key component to all this, and there's a lot of really interesting projects building on this. But my prediction is I think we'll see 1 trillion of stablecoins in circulation by the end of next year. Just to put it in context, we ended in December of 2020 at 5.8 billion. So a year ago, roughly 5.8 billion of stablecoins in circulation. We're going to end this year with 100. We are already at 150 billion. So that was a 25x increase in stablecoins. Not all of those in Ethereum, obviously some in Solana and Terra and Cosmos and the other chains. And so I'm thinking I see a path towards getting to a trillion, potentially more, between a 6x to 10x increase. And the catalyst that I think of, which you alluded to, is I think major banks are going to continue to face pressure here. And they're going to want to integrate stablecoins to offer a high yield savings account. Mind you, your Bank of America or Chase account is paying you 0%. But DeFi, stablecoin yields are 10, 20, 30%. Now, you have to probably net out a couple of things there, like insurance eats into that a bit. But I think we'll get there. And it's explosive, right? And I'll tell you, I think it's going to be someone like Circle that rolls out a high yield savings account. I mean, I think they already have. And I think that puts
they have a great business account. Yeah.
Right. And they pay what, 6-8%?
Also Meow. Meow is meow.co. Just launched a bunch of Gemini, the leading security engineers from Gemini just launched this thing called Meow.
Oh, nice.
Yeah.
Exactly.
Same thing. Yeah.
Exactly. So when you're earning that in this environment where you're essentially paying banks to hold your money, right? Negative real rates with inflation, this becomes increasingly compelling. And so that's, I think, what I'm seeing. And stablecoins probably are the most important thing that will lead to a resurgence in DeFi activity. The second one is TVL. Total value locked can be like a sort of like an interesting metric, but also not interesting metric. We focus in it a lot. My prediction here is I think TVL and other L1s will close the gap on Ethereum. And there's a good chart here. We'll probably link to it in the episode, but obviously the lion's share of TVL is in Ethereum at the moment. You're seeing some interesting rise, but still, for context, I think there's 150 billion of TVL in Ethereum. This is, by the way, a great dashboard put out by The Block, which I'm sourcing a lot of this info. There are multiple ways of counting TVL, but let's just go with this: 150 billion TVL. We started the year you know, around, call it 25 billion. So like a 5x increase or so, or 6x increase. And so I think we're going to continue to see a rise in aggregate TVL. In the episode with Stani, we talked about, can we get to $1 trillion for Aave or DeFi in general in Ethereum? And I think that's possible, primarily because, you know, I think there's been an uptick in activity in DeFi protocols, and especially Solana. And I think that might increase, that might be a big contributor. So I'm seeing a lot of this gap. Ethereum accounts for 150. I think the rest composite, which is Terra, Binance Smart Chain, Solana, Avalanche, and a few others are like, you know, less than 10% of that, 12% of that. I think that gap's going to close meaningfully.
Yeah. Yeah. I mean, it's pretty interesting. When we go back to that like corporate treasury thing, I'm going to jump to one of my predictions here, which I talked about corporates. The corporates buying Bitcoin narrative will return, and actually an extension of that is kind of what we're talking about with DeFi. I think that Web 2 companies will start just creating crypto treasuries in general. And if you look at Meow's website, you know, they're like basically what they're doing is they've developed a really simple compliant platform to access crypto yields for corporate treasury. And if you think about like all these companies that are raising a bunch of money in traditional Web 2, and then this narrative of inflation, really what you have is like a world where corporate treasury is seeking a way to just beat inflation. And with Meow, I think I'm looking at the website here, it's like 4 or 5% a year that you get. Like if you're a corporate treasurer, let's say you have like $30 million in the bank, you're getting 4% a year. That's $1.2 million of just free money, right?
Yeah. Yeah. I mean, it comes with some risk, right? I mean, there's still risk on in DeFi. I think that's why you get these yields, but still insurance will be added to that element. And we'll solve a lot of this and unlock a lot of interest to deploy.
Yeah. So 1 trillion stablecoins in circulation. When you think about DeFi on other L1s, like right now, I feel like a lot of the other L1s maybe have like, some of them have games, some of them have NFTs. Like, will every single L1 have a booming DeFi system and economy on top of it?
I think so. I think you're already seeing that, right? The first thing that get built and forked in these protocols is DeFi, or having the ability to, like an AMM, like, you know, a money market.
Got like
These are
Pangolin
core,
and Trader Joe on Avalanche.
Exactly. Yeah. They're easy to fork. They're proven in Ethereum, and so I think that naturally that's going to probably every L1 is going to have a relatively decent developed basic financial functions. Maybe even some that haven't been readily easy to get traction in Ethereum, at least L1. Something like perps, options, probably get more traction faster in Solana than they do in Ethereum L1. Now, they could get a lot of traction in something like Polygon or, you know, Optimism, or Arbitrum. Right.
How do you play this from an investor's seat? Like, if you look at this year, like at one point Uniswap was at $44. Uniswap's down to $17 right now, $18. Sushi, I don't know what Sushi's at today. I don't remember buying Sushi at like $15 or something.
It got crushed. I mean, it went all the way down to 5. It's 10, yeah. So it's actually been a healthy rally as well.
So is this a good buying opportunity for some of these like DeFi 1.0?
Well, let's forget, like, none of this financial advice. Yeah, and I always like to remind people that.
We need one of those like really obnoxious disclaimers at the beginning of the show,
like a red banner. Because look, I have vested interest in a lot of this stuff. Like, no surprise, huge DeFi in a DeFi and gaming and all this stuff. So when I talk about this, I'd be remiss not to appreciate and acknowledge that, you know, there is a lot of bias here. So, you know, I'm always been like very bullish on crypto. Try to be a little bit balanced in my predictions, but, you know, again, can I think of something that is down 80% relative to ETH? DeFi, it's out of favor. It's fine. And so, you know, I think if your crypto always rewards you if you have patience to see through the eventuality. Like, is DeFi dead? Absolutely not. Absolutely not. Now, do you believe some of these valuations? I think when you make predictions about the volume, the users, which have been underwhelming, but a lot of volume is there, and there are fees of these protocols. And so I think we need to get more users in. If we do that, and some of these other, more utility gets built into this. So it's pretty amazing what you can do in DeFi. Like,
yeah.
Like, increasingly I dread working with my bank because anyone that sends a stablecoin transfer doesn't want to do wire. And I continue to believe this is going to be the operating standard of finance. And the biggest things that I think need to happen next year is insurance. We need to build better insurance models for the DeFi. Hacks are not fun. Things continue to break. We get more Lindy and ossification, but it's still relatively. This is why you get. If you don't understand where the risk is coming from, if you don't understand where the yield is coming from, then you're the yield, right? And so you need to appreciate that there is a lot of risk still in the system. But look, succinctly, I think DeFi has been a ton out of favor this year. Yeah. And next year, I think, will be much different. Have we bottomed? Probabilistically, I think there's is a very compelling risk reward, let's put it that way, of deploying in things that are totally out of favor versus things that are euphoric. DeFi is not euphoric.
Yeah, no, I agree. I mean, one of my extended DeFi predictions here is that decentralized options just completely explode. Like we had Antonio from DYDX on the podcast, dropped yesterday. Decentralized options, I think, completely explode, most likely on Solana. Like if you look at, it's kind of tough to get actually global data on this, but I think there's about 200 billion of global volume that happens every day in trading. About 135 billion is derivatives, 55 billion is spot. So that's a ratio of slightly over 2 to 1. If you look at the DEX volume today, it's like, I think DYDX does a couple billion a day in volume. I got to check those numbers, but I think a lot of this will happen on Solana. Just because there's I think that was like one of their first use cases, right? Is building a NASDAQ for crypto. And I just think it's more cost and capital efficient, and professional traders will prefer a lot of the central limit order books that are getting built as opposed to kind of this AMM model used by things like Uniswap and Sushi, but we'll see.
Yeah, it's really important. At some point we should do a deep dive, but like the ratio of option volume versus like spot in traditional markets, in centralized exchanges, to kind of inform your view of why is there a discrepancy in a decentralized context, and are you going to bridge that gap?
Yeah. All right. Next prediction, 15 billion. This is you. 15 billion in NFT volume in 2021. Santi's prediction, 50 billion. So more than a 3x increase. 50 billion in NFT volume in 2022. For a little bit of context here, here's the volume data on the world's largest NFT marketplace, OpenSea, right now. 2018, 475,000. 2019, 8 million. So we went from about 500K to 8 million. 2020, we do 24 million, right? So from 500K to 8 million to 24 million. Last year, 15 billion, right? So completely exploded. You think we see that growth? You said more than a 3x increase. What are you thinking here with the NFTs?
There's a version of this world that this prediction is grossly underestimated. I think most of that volume has been NFTs, like art NFTs. There's some gaming components of that, but the ratio, and again, the blog does a great breakdown. Most of that has been art, digital art. But I see art continue to capture, say, on the aggregate basis, probably stays the same, probably grows a bit, maybe much, much more. But really it's this idea of other type of NFTs, right? And so I'm thinking definitely games. It ties back to my earlier prediction. Just to put it in context, in-game purchases worldwide are it's a $61 billion market. Now, let's just say we capture some percentage of that. So you factor that in. And then you have music, which I think is a huge category. It will totally explode. I think we're ready for that. Insurance contracts, I think real world assets can be captured as an NFT. And so just basically, really conceptually, like an NFT is just allowing you to capture value in ways that were not possible before. Again, this digital scarcity element, but also like brand value, your own value as an artist. I think there will be part of my thinking went into this 50 billion is existing markets that are very proven that you're just going to capture some of that. And the rest is just also expansionary, like just creating new types of ways to capture value as an NFT. And so, obviously people should go listen to the episode with Andrew and John from Super Rare. Andrew was one of the first kind of guys to create a NFT fund. And so I think if you really want to drink the Kool-Aid, go listen to that. But yeah, like put that into perspective. Like Etsy as a marketplace has done 10 billion of gross merchandise value in a year. eBay is doing 100 billion. The global art market is 50 billion. U.S. rare coin market is $4 billion. This is crazy. The sneaker reseller market is $6 billion. And that's probably one of the fastest growing markets out there. I think the prediction is going to 30 billion in the next 5 years or so, or by 2030, I guess. Sports cards and memorabilia like 5-6 billion. So again, I always like to put this in perspective, which is, first of all, super impressive that we got to 15 billion. I don't think anyone really expected.
No,
even Andrew was surprised.
15
billion. I think even Andrew in the episode was super bullish, right? He was surprised by that extent. So yeah, I think NFTs. I think the cat's out of the bag here. Artists, are in any brand really. I mean, think about it. We ended the year with Disney coming out saying that they had interest. Visa buying a CryptoPunk. Adidas doing a drop with Bored Apes. Like Bored Apes didn't even exist this year. Then you have one of the largest retail sneaker companies and sports apparel companies go out and do a drop with a company that's this is 6 months old. I think this is just telling you brands are increasingly seeing the value of being relevant and competing in a world for attention, and NFTs are doing that for a lot of these brands. And so I just think 50 billion I tweeted about this. 50 billion I think might be underestimating it, but I think reasonably credibly we can get there.
I have a couple of predictions for NFTs. I think NFTs continue to rise up. The financialization and the integration of DeFi into the NFT market will drive the prices way, way, way up as you no longer need to sell them. And it's the same thing that happens with normal crypto, right? Like, let's say I have a bunch of Bitcoin, and then I want to buy a big purchase. I want to buy a car, I want to buy a house, something like that. In the past, I needed to sell the Bitcoin to get it. Now I can take loans out against that Bitcoin. What does that do? Makes it so I don't have to sell the Bitcoin. Same thing is starting to happen with NFTs. When you no longer need to sell the asset to get the cash, aka the financialization of an asset class, you will start seeing much higher prices as there's no need to sell it. That being said, pretty risky. I mean, Mike talks a lot about this, like the financialization of NFTs. This is his thesis, not mine, will mark the top of the current bull market. And I think the thesis goes like this. It's, in 2017, ETH went up, money flowed into ICOs. You get this forced selling dynamic, and that popped the bubble. In 2021, you kind of have a similar dynamic in ETH and NFTs. ETH goes up, people throw money into NFTs, right? There's a lot of people who kind of think of these as like casino chips now. It's like, I'd never pay 10K for an NFT, but yeah, sure, I'll throw 3 ETH at it, right? And I think this idea of money gets kind of abstracted away, but then when people actually need the cash, that could, you kind of get this forced selling and the bubble can pop like that. I think that I disagree with Mike because of this financialization. Unlike 2017, you can take loans out against your ETH and against your NFTs without ever selling it.
Absolutely.
So I think that's why his thesis is wrong. I also think...
go for it.
I agree with your thing. NFTs expand beyond just art and collectibles is the second kind of sub prediction there. I also said OpenSea sees really, really strong competition is a big trend for next year. You're going to have four different groups of competition. One, you have kind of niche competition that I don't think it'll do well. Niche competition is like marketplaces just for in-game NFTs. Those will do okay. We have Justin Kahn, founder of Twitch, coming on the podcast. He just launched something like this. I think those will do okay, but we need to get Justin's take on this. Second group, geographical competition. Similar to how crypto exchanges dominate on a regional basis, you'll have the same thing with NFTs. Like you have Coinbase in the US, you have CoinSwitch, like Kuber or something in India. You have like Mercado Bitcoin in Brazil. You have Upbit in Korea. I think I'm getting some of those right. I don't know the international markets too well, but NFT marketplaces will do the same thing. You'll basically see OpenSea clones in other geographies pop up and start to win market share in those locations. So that's the second thing. The third is kind of more crypto native competition, like decentralized, more crypto native NFT marketplaces that are not run by like a Web 2-esque company. You'll see a lot of those pop up. And then the fourth bucket, just going to throw it out there, is Coinbase, right? Coinbase, whenever Coinbase comes at your business, a little bit worrisome. And I think Coinbase's NFT launch, they had like 10x the amount of users who signed up for their wait list. Now this is a wait list, but not actually users, but 10x the amount of users that OpenSea has signed up for the Coinbase NFT platform. So,
I mean, let's not.
I think OpenSea is going to do very well in the same way that Coinbase continues to do well despite all the competition. But they need to innovate.
Let's not forget Shopify. The founder of Shopify, Toby, I think he just has been very vocal around what he wants to do with NFTs. Visa, and so I think it's pretty indicative of where this is going. I definitely agree with you. OpenSea vampire attacks are going to come. SOS, maybe not it. But I think a more professional one, maybe an incumbent, maybe an existing player with a lot of distribution like FTX or Coinbase or, Argent or whoever, or just a traditional Web2 company is going to really want to take this because they're cranking so many fees, right? Just to put it in perspective, I mean, you're paying all these, they sort of follow the similar model of auction houses like Sotheby's and Christie's, and is that sustainable? Your margin is my opportunity kind of mentality. And so I think, they, as of late, it's impressive. Look what they've done, but I think there's a lot to be desired here. And by the way, I think there's multiple players here, as you said, that can capture this expanding market, not just one. I'll also make another prediction here on NFTs because we talk about punks and Bored Apes. I think the bottom of punks is 50 ETH, and we reached that 2 weeks ago. It was actually a week ago. And I'm very encouraged by Larva Labs. And I think it was necessary for the Larva Labs team.
What are we at today? 67?
67,
I think it is. 60.
So I think, look, punks, I think, are digital Picasso. I think they're in so many ways, I love them. So, full disclosure, right? There's no surprise there. But I think more importantly, I think this idea of a flippening, and there's been a lot of pressure around and long-time punk holders abandoning the ecosystem because, Larva Labs has been, when they started, they didn't really, there's this creative ownership of IP that is under Larva Labs, but I think they've come out, and we should link to this, saying, hey, we're exploring Creative Commons and we want other people to build. And so in line with the open source ethos. And so I think we'll start to see Larva Labs do some collaborations. And I'm looking at Meebits, maybe. That's probably the more interesting candidate here to bring and use Meebits in these games, right? You have a Meebit, you can use it in some of these games. And so I think for that reason, that was a big part of why punks kind of were taking a hit. But I think it's been refreshing to see Larva Labs come out and say that. And I don't think Bored Apes will ever surpass the punk floor anymore. Even though Bored Apes as a community and
ever,
no, not next year, maybe never. I don't want to say never, but I don't.
What does the punk floor end 2022 at?
100 ETH.
100 ETH.
Probably.
What is the
Bored Ape? The Bored Apes are what, 40 something or something?
They're 50.
They're 50
I think, today.
I think 75 and punks more than that.
I think one interesting thing to look at is do the Disneys and Marvels and Warner Brothers and that kind of stuff, do they issue NFTs? Do they issue their own NFTs, or do they basically partner with, do they try to embed the punks and the Meebits and the Bored Apes into their stuff? Or do they issue, one obvious one is all the Marvel people, those, oh my God, that's a NFT collection waiting to happen right there. Do they issue their own, or do they integrate? Yeah.
That's a goal. Harry Potter, like Warner Brothers, come on, give me Harry Potter NFTs, Lego NFTs, please. I was talking in the Solana conference, one of the guys that runs digital and new strategy for Coachella and some of these concerts. Huge opportunity again, right? Ticket sales and just concerts and all this stuff. It's a good.
I have a little alpha leak. I can't share it, but there's a big crypto thing coming to Coachella.
Ooh.
So
I've never been, but it's good.
It's going to be very crypto centric this year.
Great.
I think that announcement comes out very soon. So.
It's a good question. I think they're going to just want to probably do it themselves. Why would they want to dilute? Maybe some collaborations, early collaborations, as an experiment. But they these brands are probably slow, but they just have so much IP, and why would you want to dilute Snow White with a Bored Ape?
Yeah. All right. I'm going to pull us back in. I have two predictions that I actually am surprised that you didn't mention them on your predictions. My first one is everything moves multi-chain. I guess you did talk about this with the L1s, but one of my predictions is everything moves multi-chain thanks to breakthroughs in bridging technology and bridging UI UX. It feels like kind of the two technological issues that crypto hasn't solved yet. Every year we solve more and more tech issues, basically. The two remaining technological issues that we have not solved, one is bridging. Bridging still sucks. For anyone who's used bridges, you'll know what I'm saying. And the next thing is ZK, just the roll up, ZK
rollups, yeah,
like roll
or
up
zero knowledge proofs in general, like seeing applications of zero knowledge proofs. Okay.
Yeah, exactly. I mean, that's like just really, really complex math. But I think as the number of L1s grows and more show up, like AVAX and Solana and Luna and those kind of things will grow, and like Phantom and Near you talked about might start showing up more. I think bridges become a lot more important to the ecosystem. And I think dApps will end up using bridges to basically just increase access to other L1s. And then I think beyond that, I think bridges will end up launching tokens. Whether or not that's needed, no idea. Probably not needed. I can't make the argument for why they're needed. I think they'll still launch the tokens, and I think it'll drive interest in the bridges. So I think that's one predict. I don't know if you have any thoughts on just bridges.
No, well, I made a few investments in the category, and I totally agree with you. I ultimately envision, as you know, a multi-chain world and a lot of connectivity between them. So the analogy would be, in the great sort of expansion, right, for urban development, as people went west, like you had to build railroads, and so in urban development, right, not everyone lives in New York, they live in the suburbs, but you need to have good infrastructure and railway systems and subways to connect people, and I think someone's going to build this fabric, and it's going to be hugely lucrative. It's like owning a piece of a railroad or a highway and being a toll booth operator. Like I think a lot of these will have tokens. I think it's kind of necessary, but yeah, I think there's some really interesting projects that are probably going to launch next year and increase the fabric and the connectivity across these different chains.
Here's a weird prediction I have, which is predictions will make Bitcoin maxis open up to crypto for the first time ever. And the reason being, let me extend this out. So in a multi-chain world, one of the very first, like most obvious things that you need is a way to move assets across these chains. Let's take Bitcoin. If you believe that Bitcoin is this pristine collateral, right, which all Bitcoin maxis do, it's like this pristine collateral. It's like it's a perfect store of value. You want to keep it. You never want to sell it. But right now, Bitcoin's chain doesn't offer you much utility. Right now, if you want utility and you want like yield from your Bitcoin, you have to go like give it to basically a centralized company, which is very antithetical to Bitcoin, right? You have to go give it to like a BlockFi or Unchained Capital or one of these people, which I love all those companies. They're still very much the antithesis of Bitcoin, which is not your keys, not your crypto, right? So Bitcoin's chain doesn't offer you much utility. You don't want to sell it, but you want some utility. Maybe you want to bring it onto ETH's chain and get some yield, right? How the hell do you do it? You need a way to do it. Enter bridges, right? It's as simple as that. So I think bridges will be really interesting. The next prediction that I had that you actually didn't talk about, I don't think you mentioned DAOs in any of your predictions. I think DAOs, I have a couple predictions with DAOs. One is DAO tooling finally gets pretty good and DAO infrastructure gets good. I think this one's pretty obvious. Just because there's, they've raised so much venture money in 2021. I think DAO infrastructure will get a lot better. And I think like this past year, DAOs had this massive year, right? But there are still some pretty core problems that need to be addressed before going mainstream, like the Constitution DAO return of funds, like just different infrastructure problems that are pretty easy, I think. And infrastructure like shout out Syndicate DAO and some others, I think they will really improve the DAO experience. So that's one, DAO tooling gets better. And I think the second is a lot of the DAO projects won't actually take off much, but they will raise a bunch of money. And what happens there is they will basically all start doing venture investing and they will just turn into venture DAOs. So you're going to have a ton of projects. They raise like $300 million to go do this thing. They realize they don't have the right team, or it's really freaking hard to build something in a fully decentralized manner, but they have $300 million and then their founders are really well connected. So they start seeing all these venture deals. More and more DAOs start getting on cap tables like we talked about in the last episode, and everyone just turns into a venture DAO. So I think DAOs 10x their VC investing next year when their projects kind of pitter patter.
I can definitely see that for sure. I like how you frame it, which is like these token governed communities. And I think you need value to coordinate humans. Without value, this is why I think like tokens are so useful. Whether you believe the value of the token is there or not, or governance tokens or whatever. In the absence of having a token, it's really hard to do coordination. You need to transact. Think about like early civilization. Trade was super important to increase connectivity between like the Phoenicians and the ancient Greeks and Egyptians. Like without trade was the fluid. Trade was what connected people, right? And tokens do that in the digital context. And their token governed communities are super early, super nascent. I'm glad you brought this up. I hope that it's not just VC endeavors. Whereas we can start doing some really interesting things around universal basic income, around just events, like friends with benefits type of style, right? Like coordinating certain interest groups. And I hope that's, you combine that with gaming and NFTs. And, I think it sets the stage. Is it this cycle? I would agree with you. DAO tooling needs to come because coordinating people in these open source systems where anyone can come and go is very difficult. People are staking and have value at stake, but still it's difficult to coordinate. You still need to have some hierarchy. So I think DAOs without hierarchy are going to struggle and face this conundrum, which is you need to have always some hierarchy and rules and logic in place.
Yeah. One last prediction I want to share here. I still stand by. This is a prediction I said in 2021 in January that did not happen. I want to double down on the prediction. I think a crypto company will make a $5 billion acquisition of a financial services player for regulatory reasons and for their customers. I think it will be, I don't think it's any surprise who it'll be. I think it'll be either a Coinbase or an FTX or someone of that nature. I mean, crypto.com has spent over $1 billion just on sports marketing alone, right? 5x that, and you can buy a major bank. So I think there's a $5 billion acquisition of financial services player. They would acquire all of their customers. They would also acquire all of the regulations. And it makes it very tough for a regulator to then come after them.
Absolutely. I think I would agree with you that M&A is going to pick up substantially.
Haven't people said this though? By the way, every year it's like, what's the big trend next year? M&A is going to increase. There's always some M&A, fair, but like I'm always surprised that
you're already seeing that, right? I mean, we talked about the Faye and Rari M&A like acquisition. That's interesting.
True.
But yeah, look, it's specifically around banks because DeFi is much more built and robust now. And I think that might be a really interesting, if assuming we get some regulatory clarity, then I think it just really, really opens up this acquisition frenzy that you're going to see. Because banks are going to scramble.
Here's the best part. Here's the best part of this whole conversation, Santi, is that in 2017, 2018, 2019, the conversation was, why aren't banks acquiring crypto companies? If I'm a bank and I'm a traditional financial institution, I should really start acquiring a crypto company. Go out and buy a Fireblocks if you're BNY Mellon. Go out if you're State Street and buy BitGo. The conversation has flipped. It has flipped from financial institutions and banks buying crypto companies. They have missed their opportunity. The valuations are too high. The crypto companies have now become more valuable than the financial services institutions. Correct. Look at how we're talking about it. It's now crypto companies will buy the banks instead of banks will buy the crypto companies.
DeFi protocols are worth more than Deutsche Bank and have like 20 employees now. Like they're cranking out more cash flow. Like, the world, maybe the world is going to end. Like if I were to look at all my predictions, just to kind of round it out and say which one is the one that I'm most excited about, I think I'll have to say like gaming and DeFi. And this is what I'm more comfortable in investing. I see these two worlds really converging. The mega trend really is the younger generations understand this. The boomers not so much, which is our relationship with money is changing in a very drastic way. How we think about money and what that really means is ultimately utility driven. And there's a lot of utility in this ecosystem. And it's transacted in something like ETH when you're buying an NFT or in-game assets. And we always think about, this bizarre model is not very scalable. But it really is when you have this coordination mechanisms and fluidity in this like digital context. And so I ultimately think that people are starting to slowly wake up to this idea that one, they want to hold digital assets and you want to optimize for what brings you more utility and satisfaction and pleasure. And increasingly, I think you talked about a really interesting point, which is the sectorization of crypto, which is super powerful. Underneath that is this idea that there is a lot of value and utility in this. And I will emphasize this over and over because in 2017, You couldn't tell someone, hey, go try these applications. Maybe Augur, maybe 0x, but it wasn't really built out. And so you were standing there and saying, well, just hold it, because hold Bitcoin, hold Ethereum, because this is a technology bet and yada, yada, yada. And people are like, you know what? Like, no. Today, you can credibly tell them, go out and play DeFi Kingdoms. Go out and check out Axie. Go out and try DeFi. And come back and tell me if you don't like this. And I think this mental shift in the idea of onboarding people and convincing them to come to this world is increasingly not so much of believe in this crazy version that us crypto anarchist punkheads believe in. It's like, no, listen, agree with me that your experience in Web 2 is broken, that you don't like it, increasingly so. Now let me open a door for you and come into this world. Just check it out, try it out, don't go crazy, just spend some time on it. And come back to me and tell me if you don't think that this is the future. And it's now easier for everyone across multiple facets and dimensions to convince people, to onboard them. And this is why, if I zoom out all of this, I think the common, you tell me if you disagree, but I think we'll probably go mainstream next year.
I have the exact same thesis. We should be podcast co-hosts or something.
God, yeah, I know.
I was going to end it with just like a one-liner, which is like, I think if you're an outsider looking in, like I get texts like this every day. It's like, why are, what? I still don't get crypto. It seems like a big casino. And, unlike what everyone says on crypto Twitter, like I totally understand and I empathize with people outside looking in. Like the NFT market's gone completely haywire. Like DeFi kind of feels like a big casino with like 3,000% APYs. I actually completely understand why people see crypto as this big casino still. I really do. I really totally get it. 2022 is the year that it becomes impossible to see this industry as just a big casino. That's the main thing. Like you're going to get more real world applications, like honestly, like like physical, not digital applications of crypto, like more helium type companies. You're going to get like where people are actually using crypto who don't even really know anything about crypto. You're going to get more just like non-financial crypto players, like leaning more into NFTs as NFTs get outside of just collectibles and art. You're going to get a lot more gamers. The gamers will start accepting this stuff. You're going to see some really, really wild stuff happening with sports and crypto still, and like movies and crypto. And it's just like, I really do think that, like, I'm kind of sick of trying to quote unquote convince people that crypto is real. Like that's not really where I try to spend time. But I do think that this is the year where people start saying that, the people who've been texting me for years saying like NFTs are a bubble, Bitcoin's bad for the environment, like all of these kind of every 6 months, one of these one-liners. It's like, I think this is the year that they say, oh my God, there's actually this kind of cool aspect of crypto that I found. They're not going to understand all of crypto. They're going to think most of it is a bubble, but everyone will find some aspect of crypto interesting for them. And that happens next year.
Here's the thing. We've been in this, and I think if you look at like Carlota Perez book on technology, like revolutions, the way I think about it is early on, it's on the fringes. Early on, it's you're trying to pull people in, right? I think you try to convince them. It's been hard for me to convince people. Probably has been hard for you as well over the last 10 years. It's been difficult to the point that I dread these conversations, of non-crypto people. It's always the same questions and it's always the same skepticism, and some of it is well-founded. And now I think we're at this inflection point where it flips and it goes from, instead of trying to pull people, it's sort of push. We get a lot of, maybe it's the inverse, right? But you know what I'm trying to say. Like now people come here without us having to truly make this pulling teeth argument. I think, and it might be to your point, they may not even realize that they're using crypto. They may be onboarded by their financial institution or whatever. And then once they discover, they go on this rabbit hole, which is super beautiful and powerful, and each in their own way might have a discovery process that is unique to them. And, I think like, that's super powerful, that I think we're finally, I think, delivering on the third pillar of why technology really gets adopted, which is it's faster. Well, it's better, it's faster, and it's cheaper. And I think the last two are really the two things that are going to come to fruition. It's definitely going to be faster. Your experience is going to be better, and it's going to be cheaper, in many respects. And so This is why technology only gets adopted, not because people believe, and there's always die-hard fans about all kinds of random stuff. But I think the best, beautiful, most powerful technology gets adopted because it's better. Full stop, 10x better. And you faced with the choice of continuing to use your bank account paying you zero or a DeFi protocol. Like, that's it. Game over.
I agree. Game over.
Game
Cool.
over. Not so much game on. Game on. Let's go.
Game on, baby. Game on. Anything else here? Anything that we missed? Any bold predictions from you?
Well,
ETH to 100K. What are we looking at here? Like any price predictions?
Empire's gonna be the #1 podcast in crypto. The last one will say Empire. Honestly, this has been super refreshing. This is the highlight of my week. I just get to sit here. You do all the heavy lifting. It's been great. I hope people are enjoying this. We're gonna continue to do it, whether you like it or not. If you don't like it, just let us know and why. But yeah, no, I think we want to be the #1 crypto podcast. Let's get there. I think we will. So that's my hopium prediction. But I think we'll make a run at it for sure.
I completely agree. On that note, a couple calls to action here. We have some amazing episodes coming up in Q1. We've got Kyle and Tushar, first episode of January. Kyle and Tushar from Multicoin. We've got Gabby from YGG. We've got Joey Krug from Pantera, one of the early DeFi guys. We've got Ben Foreman, founder of Parify, one of the most successful crypto funds. We've got Jeff Dorman talking about activist DeFi investing from Arca. We've got Amy Wu from Lightspeed talking about gaming. Jim Bianco, traditional financial player, coming on to talk about DeFi. Justin Kahn, founder of Twitch, talking about Solana and NFTs. Arthur Chung from Defiance. We've got probably Ali or Ariana Simpson from Andreessen. We've got Rob Leschner from Compound. We've got Meltem, Demirs from CoinShares. If you want to listen to all of these episodes and hear the alpha before anybody else, please subscribe on Apple, subscribe on Spotify, and Spotify just released the ability to actually rate the podcast. Give us 5 stars on Apple, give us 5 stars on Spotify. If you're watching on YouTube, as Santiago hates when I say it, hit that subscribe button. And yeah, guys, and also just a massive shout out to all the people who make this podcast run behind the scenes. Brianna and Crystal and Reed and Will at Blockworks. Thank you so much. And also just the biggest thank you to everyone for giving us your time, right? You can be doing so many other things while you're doing the dishes or on a walk or wherever you listen to this show. So just really appreciate you listening, and looking forward to a big 2022 with all of you.
Absolutely. Thank you so much, guys. It's been great.
See you in 2022.
All right, my friend. See you in 2022. Let's go.
Let's go.